Assalamualaikum warahmatullahi wabarakatuh. Me and my group will be presenting about sukuk in Malaysia. Bank Negara Malaysia and Security Commission Malaysia play a big role in this industry. So, this is their role. Sukuk issuance and approval. Bank Negara Malaysia issue of sukuk, which is Government Investment Issue (GII), which Sharia compliant Islamic security used as an alternative debt instrument, while corporate debt security and sukuk offering are approved by Security Commission Malaysia. This implies that before being made available to investors, any sukuk issue in Malaysia must receive clearance from SC. Market role. BNM play to promote development of Islamic financing market instrument, while the SC ensure that security is derivative market is fair, efficient, secure and transparent. Oversight function. BNM provides Sharia governments oversight through SAC and international engagement as a leading global sukuk hub through a supportive issuance, while the SC ensure orderly market conduct and prevent wrongdoing to protect the stability of sukuk by implementing capital market law and regulation. Market operation. BNM play to support liquidity, to enhance Sharia compliant liquidity, management and financial system stability. While SC supervise market infrastructures such as exchanges, clearing houses and central depositories involved in the sukuk market.
Next, I would like to continue question number 1, which is the examples of how Malaysia's government direct involvement as an issue. Number 1, government sovereign sukuk as market ownership. Without sovereign issuance including the market size and liquidity, private or corporate sukuk alone would have struggled to achieve such scale, especially in early development stages. Government sukuk provide the main supply for the market and make it stable. For example, if the government issues 10 billion ringgit of sukuk each year, investors have enough to buy and sell, which makes the market active and reliable for everyone. Second one, liquidity and benchmark. Sovereign issuance supports market depth and quality because usually perceived as lowest credit risk. Government sukuk set the basic interest rate for the market. For example, if government sukuk pays 4%, the company will offer a higher rate than 4% to attract the investor. This makes pricing easy to understand and fair for everyone. Number 3 is about innovation and global leadership. Since Malaysia is first move, it is not only about funding, but also about innovation. Investor participation and set standard helping Malaysia attract in global institutional capital. Malaysia's government introduced new types of sukuk, making the country a world leader. For example, in 2021, Malaysia issued the first US dollar sustainability sukuk, attracting international investors and showing Malaysia leadership in Islamic finance.
To begin our analysis of question 2, we must trace the deliberated evolution of Malaysian sukuk market, which transformed from a niche experiment into a global mainstream powerhouse. In the 1990s inception phase, the journey started with the first corporate sukuk issued by Shell MDS in 1990. These early structures were basis and primarily asset-based, serving as the foundational proof of concept for Islamic finance in Malaysia. Moving into the 2000 growth phase, we saw a push towards standardization. The market was dominated by Ijarah and Murabaha contract. A pivotal moment occurred in 2002 when the Malaysian government issued the world's first global sovereign sukuk, which successfully created a benchmark yield curve for the entire industry. Finally, from 2010 and the present, we have entered the innovation and sustainability phase. There has been a significant shift toward complex structure like musharaka and wakalah to meet sophisticated financing needs. Today, the focus is on green sukuk and street instrument, aligning Islamic finance with global ESG standard. As required by the assignment, we have selected a specific innovative issuance, the Tadau Energy Berhad Green Sukuk. This issuance is a prime example of Malaysia's role as a global pioneer. Issuance profile. This was RM250 million issuance dedicated to financing a 50 MW large-scale solar power project in Kudat, Sabah. For Sharia structure, it utilized the Wakalah Bi Al-Istithmar or Agency for Investment Structure. Unlike traditional bonds, which are debt-based, these sukuk represent beneficial ownership in the solar project asset. For Sharia compliance, It is strictly compliant because it avoids riba or interest. Instead of earning interest on a loan, investors receive a share of the actual profit generated from the solar plant's electricity sales. This embodies the core Islamic principle of risk sharing, where returns are tied to the performance of the underlying project rather than a fixed debt obligation.
This slide explains the structure of Sukuk Wakalah bi Al-Istimar. First, investor provide capital to a special purpose vehicle or SPV by subscribing to Sukuk. Next, the SPV issue Sukuk certificates that represent ownership in the underlying investment project. The SPV then appoints an agent to manage the funds. The agent uses the funds to develop Sharia-compliant assets, such as a large-scale solar power plant. These assets generate revenue through electricity sales, creating profit. Finally, the profit is distributed back to the SPV and then to investors as periodic returns. This slide shows how Sukuk attract both Islamic and conventional investors. For Islamic investors, Sukuk is Sharia compliance, avoid interest and promotes ethical and environmentally responsible investment. It also ensures fair profit sharing without exploitation. For conventional investors, Sukuk aligns with ESG principles, support sustainable energy projects, and offer competitive financial returns. As a result, Sukuk bridge Islamic and conventional finance while supporting sustainable development.
Despite Malaysia's dominant position in the global Sukuk market, the lack of globally harmonized Sharia and regulatory standard poses a significant challenge to cross-border Sukuk issuance. Competitors such as Saudi Arabia, the UAE, and Indonesia are advancing their own frameworks, often with differing interpretations of Sharia compliance. To maintain its leadership, Malaysia must proactively drive and shape global harmonization efforts. First, by standardizing legal documentation for cross-border Sukuk. Malaysia should champion globally standardized Sukuk legal templates, particularly for Wakalah, Ijarah, and hybrid Sukuk. Malaysia can work with international law firms to harmonize enforceability. Secondly, by championing the development of global Sharia standards. Malaysia should leverage its well-established Sharia Advisory Council under Bank Negara Malaysia and the Securities Commission Malaysia to take a leading role in international Sharia standard setting bodies such as Islamic Financial Service Board. Malaysia should develop and disseminate Malaysia's model Sukuk guidelines as reference for emerging markets. Malaysia can also organize annual forums of collaboration with IFSB to align interpretations of Maqasid Sharia in sustainable and digital Sukuk.
Next, Malaysia strategically leverage financial technology, particularly through the blockchain-based Sukuk platform. Blockchain technology enhances transparency and traceability by providing a permanent and tamper-proof digital ledger that records all the Sukuk-related transactions. In the context of Islamic finance, transparency is critical because it reduces information asymmetry and exercise uncertainty gara, which both are prohibited under the Sharia principle. In addition, the use of the smart contract in the blockchain-based Sukuk allows profit payment to be executed automatically based on the pre-agreed Sharia compliance terms. This improves operational efficiency, reduces the administrative costs, and also minimizes human error. More importantly, smart contracts help ensure that Sukuk represents genuine ownership of underlying assets. This strengthens the Sharia compliance and supports Malaysia's reputation as a leader in authentic Islamic finance practice. From an Islamic ethical perspective, digital Sukuk promote values such as trust, accountability, and fairness, which are core principles of Islamic finance. These values are also aligned with the objective of Maqasid al-Sharia, particularly through the protection of wealth, Hifz al-Mal. Blockchain technology ensures that investor rights are protected through the accurate ownership records. In conclusion, this strategy ensures that Malaysia's Sukuk market remains transparent, Sharia compliant, and future ready over the next decade.